Great. David, thanks to you and your team for having us, Big Trends, at your all's event today. Definitely appreciate that. Ladies and gentlemen, my name is Chris Sayre. A little bit about that here in a minute, but we're going to talk about using the percent R, which stands for percent range indicator, to trade Fibonacci levels on the Nasdaq ETF, QQQ. If you've never traded the Qs or possibly never even heard of the QQQ ETF, it is one of the most highly traded securities out there, one of the most liquid securities that you can trade. Before I go any further, the information provided in this presentation is based on our proprietary research and is intended for illustrative purposes only and are not to be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the BigTrends.com homepage for more information. So as I said in the beginning, I'm with Big Trends. Big Trends was founded by Price Headley in November of 1999. So we've been around for more than a quarter of a century. We are quickly approaching our 26th anniversary. Speaking of anniversaries, as you can see, I joined Price and his team 14 years ago today. So today is my 14-year anniversary with Price. Fun little fact for you real quickly. When Price started Big Trends back in November of 1999, I was actually one of his earliest clients. So as you can see, I've been in and around the financial services industry in a few different capacities using Price's methods and technical analysis ways to help myself and clients over the years. Enough about Big Trends, enough about me. Let's talk about what you guys are going to learn today. So here at Big Trends, we have a trading system, as you can see there in yellow, called QQQ Options Playbook. Now, we call them alert services here at Big Trends. That's because when you subscribe to QQQ Options Playbook, when a trade is signaled, we're going to send it out to you, right, via an alert. You can call it a subscription. You can call it a newsletter, a trading system. How we boosted results with less work, right? Being here on the front lines for 14 years at Big Trends, assisting and helping traders just like yourself, what I have heard the most is I don't want to screen watch all day long. Okay. Don't want to screen watch all day long. I believe I have a solution for you today if that is you. Success stories and chart examples. Again, been around for many decades. I'm 56 years old. What I have learned is that most people learn through visual learning. So that's why we have chart examples so you can see what these trades look like. As I told you, QQQ Options Playbook is the name of the trading system. Going to let you learn about that trading strategy. And of course, have a special offer for you at the end of my presentation on how you can become our next QQQ Options Playbook client. As David has told you all today, today's about Fibonacci retracement levels here from Investopedia. Horizontal lines on a stock chart that indicate where support and resistance are likely to occur. And then our marketing team took it a little bit further down here. Fibonacci retracements are horizontal lines drawn on a price chart at key Fibonacci ratios, primarily 23.6, 38.2, 50%, 61.8%, which indicate potential price pullbacks or retracements within a larger trend. What I want you all to notice is this 38.2 and 61.8. Keep those numbers in mind as I go through the presentation. Fibonacci retracement levels have always been intriguing to us, but the main challenge that we faced was finding an objective and less labor-intensive way to use them. So as I said, over the years, we have heard from traders just like you, I don't want to screen watch. I want something fast. I want something focused. And we believe we have that for you today with our QQQ Options Playbook. So the solution was to use our version of the Williams percent range indicator. As you saw in my opening slide, that is percent R. Your trading platform may call it percent R or Williams percent R, some variation of that. We use the percent R version, which is 0 to 100. Mr. Williams, when he created it, used a negative scale. We like the traditional grade school scale, if you will, 0 to 100. It maps out the swing high and swing low of a fixed time period. Then the readings correspond with the retracement levels. Now, we're only using two of those retracement levels that I highlighted for you earlier. This approach is what we use for the QQQ Options Playbook strategy, and it has become one of our most popular trading method here at Big Trends. Let me show you an example. Okay, every chart that I share with you today, there's some things that I want you to notate. Each bar, each candle represents 1 day of trading action. So we're using daily charts. We're going to be talking about money. All that's going to be based on allocating up to, but no more than $1,000 a trade before any commission or subscription investment. And then down here at the bottom of the charts, this is going to be percent R. And if you just joined, that stands for percent range. Now, what I'm not going to teach you today is the exact setting that Price and our team of analysts use for that percent R. But as you can see over here at the bottom right, you see 60. Now, it's not exactly 61.8, but Price and our team found out that 60 is a great number for this trading method. Now, we got into this trade on Thursday, September 18th. Now, these trades come out 3:40 p.m. Eastern time, okay? All the way up to 4 o'clock Eastern time, they can come out. Now, before you say, well, the bell rings at 4 o'clock Eastern, and that would be true. However, if you've never traded the options on the Qs, they actually trade until 4:15. All right, so you have time to get into the trade. Now, you're going to notice that we carried this trade over the weekend. Again, something I've learned over the decades is some traders don't like holding positions over the weekend. We're not fearful of that. We don't buy into that perception that, oh, there's risk holding positions over the weekend. We follow and trade the trading system. So this trade, why did we get into it on the 18th? Now, you can see this is percent R down here. This is the 60 level that I just highlighted. We have to be above that, right? Then we have to have the move in the candle that we like. We have to have the open greater than the close. We get those two setups. That's why we entered that trade. Now, you're going to see that we took profits on Monday at 100.33%. Now, the system targets 100% profits, okay? 100% profits. The stop loss that we use is 50%, okay? So that's the stop. So we're risking 1 to make 2. Doesn't mean it's an absolute for every trade. We either lose 50 or make 100. You're going to learn more about how we manage these trades as I go throughout the presentation. Now, if you'd allocated up to $1,000 to this trade, you'd have made $909 in gross profit, again, before any commission or subscription investment. So let's talk about some strategy guidelines of our QQQ Options Playbook. Average holding period, 2 days or less, but no day trades. How are we avoiding the day trade? Well, as I taught you on that first case study, we're getting into these trades late in the day, okay? Late in the day. So no day trades. What type of strategy? 3 different percent R signals analyzed on that daily chart like I showed you on that first trade. Now, I use the Thinkorswim platform, but you can use whatever platform you like. But on Thinkorswim, they actually have an indicator called percent R, and that's what we use. What options do we trade? Straight calls and puts, so no spreads of any kind, no debit spreads, no credit spreads, no butterflies, condors, any of that stuff. If you can simply buy a call or simply buy a put, you can trade our QQQ Options Playbook recommendations. Now, you're going to see that we're using 3 DTE expiration. What does that mean? Well, as I told you earlier, I'm 56 years old, and when I first started trading and investing at 18, all we had back then were monthly options. Monthly options expire the 3rd Friday of every month. And then the options industry went to having weeklies. And then it's gone to dailies on some securities, just like the Qs, all right? So we're going out 3 days. Now, as I taught you on that first case study, we are using a daily chart. But I also taught you that these trades come out at 3:40 p.m. up until 4 o'clock Eastern time. So only once per day you need to be available. Now, as you see there, Monday through Friday, as I taught you on that first case study, Yes, we will get into a trade and hold it over the weekend. So that means a trade could come out on Friday afternoon as well. We do not take Friday afternoons off. If the market is trading, Price and our team of analysts are following. Now, this defined scanning session eliminates noise and allows us to use the power of those 3-day until expiration options. So why do we have eliminates noise there in red? As I've told you, I've been doing this for decades, right? So many sources out there these days trying to tell you how to trade and invest, including us. But how many of them have been around as long as us, right? What we have learned is that we're technicians. I have a degree in finance. I used to be a money manager, trust officer. You saw all that. I know how to read financial statements. Price Headley, our founder and CEO, has a degree in economics from Duke University. He's a CFA, Chartered Financial Analyst, but he also has his CMT, Chartered Market Technician. All right. Price, our team of analysts, we're technicians. So we eliminate the noise. We look for the patterns. Scanning for signals every day has resulted in high trade frequency and large profit potential, like I showed you on that first case study. So how to get the most bang for your buck while managing your risk? 3-day until expiration options allows us to get tons of leverage, or lots as the team has there, for a small investment. Well, what does that mean? The average contract price has been just $4.07 per contract over the trailing 12 months. So if you're newer options, there's 100 shares represented in each options contract. So that means the average recommendation over the past year has been $407. So you can do this with a lot less than $1,000. However, you can do it with a lot more as well. Why do I say that? Well, as I told you in the very beginning, the QQQ is one of the most highly traded, most liquid securities out there. However, please make sure you trade with what fits in your financial situation. Now, as I taught you earlier, these trades are exited after 2 days at 3:40 p.m. If they've not been closed before then, this avoids being affected by the final day of volatility. So we're not going to let the trade turn into what is known as a zero DTE. Yes, we'll go out 3 days until expiration, but we're going to get out by the end of that second day if it hasn't hit the 100% profit target or the 50% stop. And you're going to learn more. That's called the time stop, okay? So why should you care about our strategy? Let's talk about the overall performance. So as of yesterday's close, if you'd have started with us when we launched this back in January of 2023, and you started with a $25,000 account, this time allocating a $5,000 per trade. And ladies and gentlemen, this factors in all wins and all losses. All wins and all losses. No compounding. $106,018 before commission, before subscription investment. Now, as you can see tucked in over here on the left side, that's a 424% return trading one security. And we can trade calls and we can trade puts, so we can trade in either direction. Now, as the note says there, traders with smaller accounts can trade fewer contracts. We talked about that just a second ago when I showed you that the average over the past 12 months has been $4.07. Now, we must tell you, past performance doesn't guarantee future results, but what if we broke those results down on a $5,000 account starting back in January of 2023, this time allocating $1,000 per trade? You'd be up $19,060. Again, tucked over here on the left, you see that's 381% under that scenario. Past performance doesn't guarantee future results. Future results are going to vary, but what we like to say here at Big Trends is what doesn't vary is Price, our founder and CEO, and his team of analysts. What doesn't vary is they don't take days off, as I taught you earlier, when the market's open. They are watching precisely with precision to find good trading opportunities. Now, listen, I've told you there's going to be losses. I'm not saying we're perfect. If you're looking for perfection, please do not sign up with our special offer today. Step number 2, we're going to look for a specific setup. Each trading day is going to fall into one of 8 categories, one of 8. Our team found that 3 of those categories are tradable patterns. So just 37.5%, 3 of the 8 are tradable patterns. That means the other 5, of course, are not tradable. We look for the percent R to be within certain windows, and you'll see more when I show you more charts. As I showed you, we're using the 60 level, and you're going to see on some of the other charts we're using 40. Now, 60 is close to 61.8 in Fibonacci, and 40 is close to 38.2 in Fibonacci. And then we confirm those with those candlestick patterns like I showed you on that first chart example. Now, our team used the historical profit factor to determine which days were the best for long trades via calls, short trades via puts, or neither. Now, if you've been doing this as long as I have, you will determine that some days are best not trading at all. Cash is an asset. It's okay not to trade some days, in our opinion. Now, what does historical profit factor mean? It just means with this trading system on the Qs, as you have seen, there is a positive edge over time. Now, if you just joined me, I told the group earlier, we're not perfect here at Big Trends. Not every trade's going to be a winner. Once again, if you're expecting perfection, don't sign up today. But historical profit factor just confirmed to Price and our team of analysts that trading the Qs in this system does have an edge over time. So let's look at more trade examples. As I told you, lots and lots of case studies. Remember, each chart is a daily chart. Now, down here at the bottom, we've got percent R. Now, you're going to see 60 here and 40 here. Now, as I just told you, yes, that's close to 61.8, and yes, that's close to 38.2, those key Fibonacci numbers. That's what Price and our team determined were good for this trading system. Now, this trade was entered on September 11th. Again, you see percent R in this upper range above this 60 level. We entered the trade. Why? Because we got the gap up and close higher. And then 2 days later, we closed it down. Again, a trade carried over the weekend. We don't fall into that. We think it's a fallacy to believe that way. However, trade with what fits for you. It hit our profit target 100%. The trade made $864. If you just joined, all trades today are based on allocating up to, but no more than $1,000 per trade before any commission or subscription investment. Here's a trade on September 4th. Again, percent R just above that key 60 level. Got the gap higher and move higher. We enter at the end of the day, and then we catch it right before that jobs report. The jobs report comes out. The market liked it initially, and then it rolled over. We were able to get our 100% before the rollover, and we made $740 in gross profit on that trade. Here's a trade entered back in August. Again, percent R above 60. We got a gap up and move higher. 2 scenarios that we like for trading calls here. Trade hit 100%, made $936 on that trade. Here's one back from July 2nd. Again, not taking the holidays off. Yes, the 3rd was a shortened session. We don't care. We follow the trading system. Trade made 100% in less than 24 hours. Now, remember, past performance doesn't guarantee future results. Future results are going to vary, but the results of that trade were $814 in gross profit. Now, I told you this earlier, but I want to drive this point home. Again, being here for 14 years, interacted with some traders over the years, expecting perfection. Look, folks, trading is difficult. It is challenging. You're going to have losses. You subscribe with us, yes, you're going to have a loss. But as I told you, we do believe we have a positive edge over time. But I also told you, speaking of time, that not all trades are going to hit 100, and not all trades are going to hit the 50% stop. We have the Tom stop rule. So as I shared with you earlier, we will get in using 3-day until expiration options. If the trade hasn't hit 100% profit or the 50% stop, we will close it down 2 days later. So we got into this trade on September 9th and we closed it down on September 11th for 42.62%. Still made $390 on it, but we closed it down via that time stop rule. Here's another one for you. Back in August, got in, got out, closed it down, okay, via the time stop rule. Why did we enter that trade? Percent R above 60. Now, this is one of the other patterns. We will get in on a close lower. Yes, we will buy calls on a down day. That trade generated $516 based off allocating up to, but no more than $1,000 a trade before any commission or subscription investment. Now, if you've been with me through the entirety of my presentation, you heard me talk about ample trade frequency. Not going to be a trade every day. About 8 trades per month, on average a couple trades per week. Remember, 3 out of 8 tradable patterns that our team has identified. Very select, very targeted trading opportunities. So about 8 per month. Now, here's where we hit trades back to back. Got into this trade here. Now, what I want you to notice, this is the first time I'm showing you this. Look at percent R down here below the 40 level. On a down day, yes, we bought calls, and it made 100%, 100.75%. Then we flip it after this gap up, and percent R gets up above 60, what we deem a key Fibonacci level. We enter the trade, and then it makes 100.49%. So 2 of the 3 tradable patterns represented right there on that one chart for you. Now, as I've told you, not every trade is going to be a winner. So let me show you an example of a losing trade here. 50.32%. We got in, we got the gap higher that we like, that I've shown you. We've got percent R if you just joined. This is percent R. It's above our 60 level. We get in, and it rolled over on us. We were diligent. We followed our trading system, and we got stopped out. 50.32%. Now, here's a trade that got past our target for a winner that was a little larger than expected. So if you've been trading anytime at all, gaps can work against you, and they can work for you. Here's an example where it worked for us. We made 144.25%. Why did we get into this trade? Well, here's 60, right? You can see that over here. We got percent R up above it that we like, and we got a gap closing higher. And speaking of gaps, it gapped up on us, and that's how we were able to make more than 100%, 144.25%. Now, trading 3-day until expiration options can be seen as aggressive, okay? But as I've taught you, with our unique trade management, we have found this to be extremely successful. Here's a reminder how this strategy has performed over time. If you just joined, the strategy was started in January of 2023, okay? If you just started back then with a $25,000 account, allocating $5,000 a trade before any commission, before any subscription investment, you'd be up $106,018. $106,000. That takes all wins, all losses, totals them up, no compounding. 424% return, again, trading just one security. Now, past performance doesn't guarantee future results. If you just joined, I shared this with the group earlier. If you'd started back in January of 2023 with a $5,000 account, this time only allocating $1,000 a trade, you'd be up $19,060, again, before any commission or subscription investment. 381% return. Folks, this is trading one security and one security only. Getting in one time per trading day. holding these 48 hours or less, right? Or 2 trading days. Think about it. Past performance doesn't guarantee future results. So until midnight, you can get real-time trade alerts when this strategy triggers a fresh signal. Now listen, I know it's Friday for several reasons. One, as I told the group earlier, it's my 14-year anniversary here at Big Trends. I know that's not a Fibonacci number, but it's something I'm proud of. 14 years here on the front lines at Big Trends. But as I've taught you so far in the presentation, our team doesn't take Fridays off, especially Friday afternoons. So what I'm about ready to share with you, you could, if you sign up today, you could get your first trade this afternoon. So the name of the strategy is called QQQ Options Playbook. Internally, we call it QOP, or the Q's system. All right. Now, 3 months of trade alerts from the QQQ Options Playbook alert service. Again, we call them alert services. Why? We're going to send you an alert to trade. Bryce Headley, again, founder and CEO, he sends his apologies, but he did have a family emergency situation that kept him from being the presenter today. But one of the things that I can tell you about Bryce, being here 14 years, as I told you all earlier, I was actually one of his earliest clients. Bryce wants to educate you as a trader, so he makes resources available to you. If you want to utilize them. If you just want to sit back and get your trades, that's great. But Bryce does weekly video updates, okay? Market commentary for you. Settings and rules sheet. Well, what is that? Mine's laying here on my desk right beside me right now. It is a 2-page PDF that outlines the trading system for you. It's going to talk about the exact setting that Bryce and our team of analysts use for the %R indicator. Now, I've taught you 2 of the thresholds that they use, 60 and 40, closely representing those key Fibonacci numbers. One of the things that I haven't taught you today that I'm going to share with you now, and it's also shared with you on the settings and rules sheet. Bryce and the team use an indicator called average true range, ATR, in the option selection process. So you may think today, hey, I can go back, watch Chris's video, figure out what setting they're using for %R. I already know they're using 40 and 60 as key levels. But what you're not going to know is the exact option selection process. And that's key, especially with the power of those 3 DTE options. Now, as I told you, Bryce is passionate about educating you as a trader if you want to be educated. So he makes available a dedicated email address that goes directly to him and his team of analysts. Should you have any questions about trades, anything you hear him share in his weekly video updates, or anything you may read and study on the settings and rules sheet, that dedicated email address is given to you in your welcome email that we'll send to you. So you'll get 2 emails from us today when you sign up. You'll get your purchase receipt, of course, and then you'll get your welcome email. So the total package value is $891. That's based off the monthly list price of $297. But I have a special offer for you, as you can see here. Synergy Traders Special Package. 3 months of trade alerts, and guess what, folks? It doesn't automatically renew. So no surprise charges as we approach the end of the year. You know, your holidays, maybe holiday spending, and you forget, and you're like, oh my gosh, Big Trends just hit me for whatever. Nope, we're not going to do that. No surprise charges. You subscribe today. Your subscription will expire in 3 months, okay? Now, what if you want to renew? Well, thank you for asking. What'll happen is 3 days prior to your expiration, okay? 3 days prior to your expiration, we'll send you a notice. We'll send you a notice that gives you the opportunity to renew. If you're busy traveling with the holidays or you miss it because you're out shopping, no worries. Your subscription will simply expire in 3 days. Now, as you can see there, it's a very simple URL. It's bigtrends.com/QQQQ. And we're marking out the retail price, not $891. As you can see here, your price is just $177. That's not per month. That's for all 3 months. Okay. That's for all 3 months. David, thank you for putting that URL in the chat box. Let me see if I can go share that page. Can you all see that checkout cart there? Somebody let me know. Jump in the chat box there. Yes, great. Thank you. So this is our checkout cart. It's one simple page. Billing information up here at the top left. First name, last name, email. What we do ask is in this email field, put in your trading email address, not your junk email address, okay? We want you to get your purchase receipt, your welcome email, and as I told you all earlier, you could, I'm not guaranteeing, but you could receive your first trade today. So put in that trading email address. Contact information was on some of the slides. It's located in 2 locations in the checkout cart. First, up here at the top right, give us a call, 1-800-244-8736, or drop us an email, clientcare@bigtrends.com. We're here today until 5:30 p.m. Eastern Time, Monday through Friday, 9 a.m. till 5:30 p.m. Eastern Time. If the market's open for a full session, we're here till 5:30. If the market closes at 1 for a holiday or observance or some reason like that, then we're closing at 2. All right. But we're here on a typical trading day, 9 till 5:30. Now, there's 5 ways for you to sign up today. 4 of them are up here at the top. Payment info, Visa, MasterCard, Amex, Discover. So the 4 major credit cards. But if you glance down there to the bottom right-hand column, you can see that we accept PayPal as well. And remember, it is a 3-month subscription. Retail price, $891. Yours for $177. And again, it doesn't automatically renew. Terms and conditions are listed there and there. And as I told you, the contact information is listed a second time as well. And as it says down here at the bottom, folks, we're here to help. As I told you, we're not perfect, but we've been doing this for more than a quarter of a century. We've been around. We have seen, we have experienced a lot of things. We're here to help. We give you trades. We give you resources to utilize if you want to utilize them. We give you a phone number. From what I'm hearing, a lot of people in the industry don't even have phone numbers anymore. We're here to support you should you need assistance. 1-800-244-8736 or email clientcare@bigtrends.com. So remember, it's bigtrends.com. You don't need www out there in the front. Simply open up your favorite browser, go up to the URL bar, and type in bigtrends.com/QQQ and follow that checkout cart process. FAQ, a little frequently asked questions about our QQQ Options Playbook strategy. So what type of strategy is used? If you just joined, we're trading calls or puts, no spreads of any kind. Now, how are you going to receive these trade alerts? You've heard me talk about it real time via email, but you'll notice first mentioned today, WhatsApp. We do not text trade alerts. Cellular industry is cracking down on what they think is best for you to receive on your phone. So we don't text. We've been using WhatsApp for about 2 years now. It's faster, it's cleaner, and it's more efficient than texting. And guess what? The app is free. And you can put it on your computer, your laptop, your tablet, your mobile device, or all of them. It's free. We give you setup instructions in 2 locations. In that welcome email that you've heard me reference, you can also find it in your Big Trends account under the My Account section. Do you have to use WhatsApp? No, you do not. You can simply get your trades via email. But if you want a little notification to pop up, WhatsApp is that solution. Again, we've been using it very successfully for about 2 years now. When are the new trades sent? 3:40 p.m. Eastern Time. Remember, Yes, the bell rings at 4, but these options trade until 4:15. Don't learn that the hard way like I did several years ago to the negative side. Winner trades close using the time stop. Remember, 2 days later after entering a trade, if it doesn't hit the 50% stop or the 100% profit target, we will close them down two trading days later at 3:40. How many trades per month will you receive? 8 trades per month on average. Day trades, we've discussed this. No day trades. All right. Don't have to worry about that. Average contract price, $4.07 per contract. Again, if you just joined, it's $407 per trade average. Okay. You can trade with as little as $400 or $500. You can trade with a lot more of that. As I've taught the group today, the Qs are one of the most highly traded liquid securities. But as I always say, and yes, I know always is an absolute, please trade with what fits in your financial situation. Don't put half or your entire account into the first trade. Okay. Be prudent, trade smartly. Resources. Price Heedley, again, our founder and CEO, weekly video updates, settings and rules, 2-page PDF outlining the trading system for you, and it reveals the settings, 4% R, 4 average true range. It talks about the 3 tradable patterns that our team utilizes. Remember, if you have questions about any of it or all of it, you can reach Price and the team via that dedicated email address. Now, here's a reminder of just what one trade has been able to accomplish. This was the trade that we got in on Thursday of last week, held it over the weekend, and hit the register on Monday, hitting our profit target 100%, 100.33% to be exact, making $909 gross profit. Remember, all case studies today are based on allocating up to, but no more than $1,000 a trade before any commission or subscription investment. If you just joined, this indicator down here at the bottom is percent R. That stands for percent range. Okay. Now, we have simplified what we believe is the best way for us to use the Fibonacci levels. We've got 60 down here and we've got 40 down here. We know that 61.8, as we had on the slide, and this bottom number, 38.2. But again, in our testing and in our research, our team found that 60 and 40 works best within this trading system. So we got the percent R signal that we like above 60 here. And this gap higher, we enter, and it continued to rally higher, as you probably know, again, making $909. Folks, one trade, depending on what size trader you are, could cover your $177 investment today. As a reminder, if you'd started back in January of 2023 with a $25,000 account, allocating $5,000 a trade, you'd be up $106,018 gross profit. That's adding all wins, subtracting all losses, totaling it up $106,018 before commission, before subscription investment. Past performance doesn't guarantee future results. Future results are going to vary. Now, remember, it starts out at 3 months with the resources at retail, $891. Synergy Traders Special Package. Your price, and that's not per month if you just joined. It's not per month. $177 for 3 months and those 3 trading resources, just $177 when you go to Big Trends. And as you can see there, Big Trends is plural. No www needed in the beginning, but you do need the 3 Qs at the end. BigTrends.com/QQQ to lock down your special price. Remember, one simple checkout cart. Get that email field with your trading email address. 4 major credit cards or PayPal. No automatic renewal. $177 gets you in the door for the next 3 months. And typically, the fourth quarter of the year is a fun time to trade, right? I mean, trading's fun all the time, but typically the fourth quarter, my opinion, right? Of course, past performance doesn't guarantee future results. Future results are going to vary. Now, let's review that winning trade one more time. Got in on Thursday the 18th. We got the percent R above the 60 level that we like. We got a gap higher and a close higher. Another scenario that we like in conjunction with that percent R being above 60. And as I've taught you on Monday, we closed it out for 100.33%, making $909 on that trade before any commission or subscription investment. So what do those trade alerts look like, right? What do these look like? What are we going to send to you? Well, let's talk about that. Now, as I told you, these trades can come out up until 4 o'clock. They start looking at 3:40, but we can send a trade alert, as you can see here, at 4 o'clock. You still have 15 minutes to get in. Remember, these trade until 4:15. Now, you're going to see buy to open, trader lingo. It just simply means you're starting a new position. Let's say we're at a party or at a tailgate, and I hand you your favorite beverage, okay? You got to open it to enjoy it. Regardless if it's water, soda, adult beverage, whatever it is, you got to open it to enjoy it. We're only trading one security and one security only, the Qs, QQQ. We tell you exactly the option to trade. This was the September 23rd. We even give you the month and the day. We tell you the exact strike price. Remember, Price and the team are using what? ATR, average true range, in the option selection process. We tell you the direction, call. We even tell you what to pay. So there's no doubt about what you're to do. No guessing. We're not just saying, hey, buy some calls on the Qs. You figure out the expiration. You figure out the strike. You figure out what to pay. No, folks. We tell you exactly how to trade it. And we do put that reminder down here that they trade until 4:15 p.m. Eastern time. Now, the next morning, before the market opens, remember the market opens at 9:30 a.m. Eastern time. We give you the stop for the day and the target for the day, right? And we're going to work these good till cancel. What does that mean? That means you just operate under those parameters until you hear us otherwise. Now, if you want, you can set up what's called a bracket order, or in the trading world, it's known as an OCO. Do you have to use OCOs? You don't. You don't. I've got some working right now while I'm presenting to you, okay? Do not have my trading platform open. I love OCOs. They allow me to do my job. Simply means you have a stop and a profit target working at the same time. So as we know, the profit target was hit, so the automated software will cancel that stop. So you have both trades working at the same time. Hence, one cancels the other. So when one is executed, the software cancels the other. But remember, you do not have to use OCOs. So what's that trade look like? As I've taught you today, all the case studies were based on allocating up to $1,000 a trade. Well, that would have been 3 contracts at 302. That's 906 into the trade. As you've seen a few times today, we closed that out on Monday at 605. That's 1815 back into the account. When you do the math there, that's $909 before commission or subscription investment, or 100.33%. So don't forget, bigtrends.com/QQQ to lock down your Synergy Trader special package, 3 months of trade alerts for just $177. Retail value, $891. Marking that out. Your price, not per month, but for all 3 months. This will get you to about Christmas, right? So think about that. Think about what's ahead for you. bigtrends.com/QQQ. Synergy Trader Special Package. Now, I appreciate David throwing that into the chat box. So, David, thank you for doing that. There's the checkout cart once again, folks. Someone is asking, after 3 months, if I want to know, is the price still 177 for the next 3 months? It's a great question. Don't tell anybody, but we would grandfather you in at 177. Okay? We would. 177. So you could come back again for 177. But remember, it will not automatically renew. No automatic, no surprise charges, none of that stuff. Okay. BigTrends.com/QQQ. You're welcome. You're welcome. I wish I could see your name. I just see part of a, I guess maybe sign in there, but you're quite welcome. Anybody else have any other questions? David, I'm sorry I've gone a little bit quickly. I tend to get excited and go a little bit fast. I believe that was like 50 or 51 slides, and I did it in about 45 minutes.
Yeah, it was a great presentation. So
Thank you. I appreciate it. Appreciate it.
yeah, you have a few extra minutes if you have
Sure.
anything else you want to share,
Yeah,
or
sure.
if
So someone's asking, does it work in a down market? Yes, it does. Yes, it does. So, I mean, it can catch down moves as well. As remember, folks, we're not trying to call absolute bottoms, and we're not trying to call absolute tops. We are looking for quick swing trades. So we've had some clients write in recently where we've hit the trade like I've showed you a few times that we closed out on Monday, where we got in and they're like, oh, I have a bearish stance, but you all still made money with calls. And that's fine. You can have a bearish outlook for the future or for the next several months. That's fine. Do that with your investing money. But folks, we're talking about trading money, and we're talking about very short, quick swing trading money. So we don't care about 3, 6, 9, 12, 2 years out in advance. And there's all kinds of prognosticators out there trying. Most of the time, what I've seen over my several decades of experience, most prognosticators that the business channels bring on want to scare the bejeebus out of you. I'm going to keep it clean. They're trying to scare you to death. I don't know why. I'm an optimistic person by nature. Okay. Yes, I do look at the facts. Yes, I do look at things. Yes, bear markets can stink. But to answer this person's question, yeah, we can trade to the downside as well. We will use puts, but we haven't had to recently, right? We've been in an uptrend and we've been riding and rolling with this uptrend. But if things change, system starts identifying puts, then of course, yes, we will trade puts. Someone's asking, do you have a program that uses spreads or condors? Great question. Thank you. So if you've never gone to bigtrends.com and looked at our menu, something that I've heard over the years is you all have a lot of offerings. If you've ever been to Cheesecake Factory, Cheesecake Factory has a lot of entrees. We have a lot of entrees as well. We get asked, well, why do you have so many? Well, it's because people have different ways and methods of processing information and liking to trade. Okay? That's why. So to answer your question, yes, we have a service that trades debit spreads, and we have 2 services that trade credit spreads. Please reach out to us, client care at bigtrends.com, or call 1-800-244-8736, extension 2 for client care. And my colleague Clay will be glad to work with you. All right. Someone's asking about one of our alert services called Nifty 50 Options. Thank you for knowing that. Yes, there has been a recent special offer for that. So please reach out to Clay, client care at bigtrends.com. Just answered that about Nifty 50 Options. Yes. Clay at Big Trends or client care at bigtrends.com, 1-800-244-8736, extension 2 for client care. All right. So we can take care of you with the spreads question. We can take care of you about one of our services called Nifty 50. Someone's asking about a replay. I believe David and his team will be sending out a replay. So we'll get that to you. Gene, thank you. No apologies for being late. Hey, I know life and events get in the way there. There's David posted that. Yes, he's recording the presentation. We'll make it available. It's great. Forex trader. Hey, Forex trader. We don't have anything for Forex. We trade stocks and ETFs using technical analysis. Now, could you use some of our technical analysis to trade the Forex market? I would like to think so, but we don't have a product specific for Forex. Let's see what else we have here. About the spreads program. So as I said, we have one that trades debit spreads. It's called Vertical Options Trader. And then we have two that trade credit spreads. One's called Index Options Timer. It's only trading credit spreads on SPY, SPY, and IWM, the Russell 2000. And then the other one's called Premium Options Income. I did a presentation on that yesterday. You can find those presentations in your Big Trends account. No predictions here on cryptocurrencies. Sorry, I'm not going to go down that road at all. Full disclosure, I am long some of the cryptos right now, but no prediction on what's going to happen between now and the end of the year, because I am a trader. I will get out if they hit my stop levels, or I will scalp profits and take the profits as they are had. So no major, sorry, I'm not going to make any predictions on crypto, but full disclosure, once again, I am long some crypto ETFs. That's how I trade crypto, is via the ETFs. All right. BigTrends.com/QQQ. Someone's asking about our programs. Please call 1-800-BIG-TRENDS. Extension 2, 1-800-244-8736, extension 2, or email clientcare@bigtrends.com and reach out to our team. And I believe my colleague Clay is going to be handling those questions today, and he will work with you on that. But if you want to trade the Qs in a short time frame, remember, we're in and out of these in 2 days, 2 trading days or less. You can lock down your Synergy Trader Special Package for just $177. That'll get you 3 months of trade alerts. BigTrends.com/QQQ. David, are we good, or you want me to stay on the air for a few more minutes?